Trump and all that, but you learned something about short selling, so now you know. So when somebody says, I'm shorting this, that's what they're saying. I'm betting against it. I'm betting it'll go down. So let's skip on. I want to do some like a little bit of economic stuff. So the Fed right now, Jerome Powell's the Fed chair, and there was some news about inflation was a little hotter than expected, and employment's still really, really low. It's still a tight labor market. Wages are growing pretty fast. So basically, Jerome Powell's sitting there going, okay, we were going to cut rates this year. They were hoping to do it 3 times. That's what they're doing. And now it looks like he was a little bit sort of indicated today they might be pumping the brakes a little bit on that. I'm sure they probably will later this year, but it's to what degree and how many times they do it. But they want to do it like slowly, because if you do it too quick, it could crash the economy. So, anyway, Trump's guy that he wants for the Fed chair is a guy named Art Laffer. Now, for those of you who didn't go to finance or economics in college or slept through it, you will know probably don't know this. Art Laffer is famous for being the guy that totally fucked the U.S. economy. One of the guys under Ronald Reagan, and he developed this thing called the Laffer curve. And I'll get into that in a second. But I want to show you this because Art Laffer is wrong about every fucking thing he does. He's never right. And here he is with my favorite douchebag, Larry Kudlow, Mr. COVID went away in the middle of COVID when 7,000 people died that day. Kudlow, who's on Fox Business, and he's such a douchebag. And here's 2 guys who never get anything right, that fuck everything up, talking about the economy. It just, and let me give you a time frame on this, because I found this clip and it just kills me. So this is 2 months ago. This is back in February. These 2 dipshits are talking about this.
Hey, folks, let's just jump right in. We got Kevin Hassett, former chair.
Oh, God, again with this?
We, the people of the United States.
We've moved so far away from the Constitution that in many ways we...
All right, 3, 2, 1.
Hey, folks, let's just jump right in. We got Kevin Hassett, former chair of the Council of Economic Advisors during the Trump administration, distinguished fellow at the Hoover Institution and author of The Drift, Stopping America's Slide to Socialism, and Art Laffer, former Reagan advisor and Presidential Medal of Freedom recipient.
So this guy is responsible for the immiseration of millions of people and the inequality gap in the United States. So when you sit there and go, why am I not making more money and why am I poor? And why are taxes so low on the rich and so high on me? This is the face that you should see, because this is him. Oh, wait, hang on, let me get into it. There he is, this is him. I was on me. My bad, guys.
And author of Taxes Have Consequences. I will begin with my dear friend Kevin Hassett. We've talked...
Let's skip Kevin real quick and we'll go into Art.
Sessions to sort through, Kevin Hassett, former CEA chair. I mean, everybody got it wrong. And by the way, I'll raise my hand. I said either a big slowdown or a recession. I was wrong. That's all there is to it. Now, Kevin, what the heck happens next?
Well, I'm thinking about what happened 30 years ago. Because, the problem with economics, right, is you look at the past data and then you assume that the data generating process for the past works going forward. But what happened 30 years ago, just about exactly 30 years ago, was Netscape introduced this web browser thing. And it was 1995. And the web browser thing...
Okay, so just to get into that kind of thing. So in economics, yeah, you're looking at past data because you're looking for trends. But the past does not necessarily reflect the future, because when you're in finance or economics, a lot of the math we do is hypothetical, because what you're really trying to do is predict the future. Well, the one thing nobody can do, one of the many things nobody can do. See, he's right about that, but what you got to factor in when you're making these projections and shit is you got to factor in what are the odds and what's different today than what was back then. So when he's talking about, okay, yeah, but in the 90s, when Netscape came out, it boosted the economy because the internet became a new thing, new technology. But at the same time, what he's not pointing out is at the same time in the 90s, we had a similar economy in the sense that rates were really high like they are now, and they stayed high through most of the 90s. But it was a huge booming era, and a lot of that was because of the dot-com era, and a lot of that was because when Clinton was president, Clinton was able to generate enough revenue by raising taxes a bit in order to, and he didn't balance the budget, but he brought down the deficit and created a surplus of cash. So the government was making more money than it was spending every year. And that's the last time that happened. But that's because the economy was so good. So you have a situation that's similar now, but what's the big thing that's happening now that might kick this whole thing off? AI. If AI comes through, and I'm not talking about like the Terminator, get that shit out of your head. We're talking about machines that just do more complicated stuff. That's it. They're not like self-aware. So if that comes through, that'll be a huge
Thank goodness.
Yeah, but that'll boost productivity through the fucking roof. And now all of a sudden I'd have a situation like we had in the 90s where you're kind of in a Goldilocks zone where, yeah, rates are high to keep inflation down as much as possible, but still wages are fucking shooting up and the economy's shooting up. And that would be an ideal situation. But let's go into, because Art's going to sit there and tell you that everything is bad. Because he knows. He's a freaking idiot.
Interests are wrong, Keynesians are wrong, Phillips curvers are wrong. You know, you had huge Fed tightening by any yardstick, and what happened? The economy got stronger, okay? 2023 was a very good year. 2022 was not a very good year. In fact, the first half of 22 were negative GDPs. So, inflation comes down.
Okay, first off, this sounds so stupid. Why was 2022 a bad year? Oh, I don't know, because we were all still fucking hiding in our homes from COVID and we were just getting the vaccines. Yeah. And then Kudlow and both of these dipshits both predicted there would be a huge recession in 2023 because Biden put excess stimulus by giving people cash, the American people, so we could stay home during COVID. But then when we got out, we had excess cash, so we spent more, and that shot up inflation because we had a little bit more excess cash. But what really shot up inflation was the businesses realized that and said, oh, now they're all out in COVID, they're spending, they have some excess cash, they've been all locked in their houses for a year, we can charge them whatever the fuck we want and they'll pay it. And they did that. And so they drove up inflation to jack up their black on the balance sheet and fucked everybody over. But they didn't raise wages, and now they're fucking paying for it because people are unionizing, people are demanding more wages, and now they're in a job shrinkage where there are more jobs than there are people. So now if they want to get people, they have to pay them a lot more.
Right.
So that's what's going on right now. So it's unique. You can't compare it to 30 years ago in an identical sense. Because 30 years ago, we weren't coming out of a pandemic. There wasn't a national crisis. None of that shit had happened. Right? That's not what fueled any of that. So you got to look at the circumstance. You can't just look at, well, it's sort of like this on the numbers. Well, yeah, but what caused it? And what do we think the outcome is going to be, and how that will affect things? It's intuitive. It's not like you just, and you're guessing. If you're even close to the target, it's great. It's like when I do a financial projection. If I'm even close, then I did my job. If I'm way off, then I got to figure out where I screwed up. And the real mind fuck is if I'm exactly right, then I freak out because I really screwed something up, or I got really lucky. I should never be fucking on the dot.
So
It goes up. The Fed's tightening doesn't seem to have mattered, Arthur. What happens here? Why? How are adjustments going to be made? Or maybe nobody should listen to economic forecasters anymore.
Well, I'd rather watch a weatherman myself, Larry. But seriously, before you get into the balloons, the streamers, and the party horns, this economy is not a great economy. It really isn't. Yes, we had nice growth this last year. Yes, inflation did come down. But the stock market today is at the same level in real terms as it was in March of 21. The participation rate is 62.5%, which is really, really low. It was like 67% when Clinton left office. Our GDP growth is not caught up to what it was pre-pandemic. And the worst one of all, life expectancy, is down about 3 years, which is really bad when you're 83 like I am. I mean, I really count on that life expectancy not going down. I want it up. But, I mean, look, this economy is not in good shape. It really isn't. The only thing that's really doing well is immigration, and it's hitting new highs every day. I mean, you can...
Now, I want to remind everybody, that was 2 months ago. All those numbers have flipped, and he's wrong. GDP is up. Life expectancy is actually starting to go up again. And that's not anything to do with the... I mean, there is economic factors that cause that, but it's not like a short-term thing. Those are long-term trends over time. And that has to do with people being able to get medical care, mostly. So all this shit he said, he was wrong. He was, oh, it's a bad economy. It's not going to get better. It's like, no, up till 2 months ago, it was getting drastically better, but now we're starting to get above where we were when it hit, when COVID hit and tanked everything. It's a recovery period. And these guys have been predicting there wouldn't be a recovery, there'd be a huge recession. All three of these guys have been predicting that for years now, and they've all been wrong. And they keep saying, well, all these other guys are wrong, all these other guys. But these guys are always doom and gloom. But then, like, when Trump is president or a conservative's president, the world can be on fire. We could be in the middle of COVID. They'll tell you how great the economy is. And nobody's working.
They'll be screaming, bumper crop, bumper crop. Yeah.
Yeah, but Art Laffer was also he was an economic advisor for Trump. And he's a fucking idiot. But just to give you a little bit more on this guy, because he's dangerous. He's a dangerous individual. And Trump's looking at putting him in charge of the Federal Reserve, where they get to choose what the rates are. That could be really dangerous if the Federal Reserve becomes political. So here's, U.S. could be facing years-long economic turmoil, says Art Laffer. Didn't happen. This was June 2022. And he was wrong with his whole doom and gloom. Art Laffer, economic advisor for former President Ronald Reagan, told Newsweek that the economic downturn the United States has experienced may not be ending anytime soon. There is nothing that can bring an economy to its knees more than high inflation and high tax rates. Laffer said during a recent interview, I think today's economy looks worse than it did under former President Jimmy Carter. And you saw what happened following Jimmy Carter. We had a political revolution that led to a long era of prosperity with Reagan through President Clinton. Bullshit. Things were not good under Reagan. Things were bad under Reagan. Economically. Things were shit. And I'll show you guys just how bad it was. They had to cheat to try and lie to tell everybody the economy was good under Reagan, and he was one of those guys that did that. Okay, along with his noted work as an economist, Laffer has worked in academia and frequently discusses economic issues on news programs. He's known for developing the Laffer curve, a theory that illustrates the relationship between tax rates and the amount of tax revenue collected by the federal government. This is what I wanted to get to with this guy, because he's still pushing this. It's called supply-side economics, right? The concept is this. At a certain point, taxes are too high. Are you there? Did I lose you?
Yep.
He's saying at a certain... basically, he drew it on a napkin when he sold this idea to Reagan and the Reagan administration. Here, let me find it real quick. This is what he drew. This is it. This is his whole theory. All right, on the left side is government revenue, right? The amount of taxes the government brings in. And on the bottom here on the x-axis is the tax rate. He's saying at a certain point, the tax rate, you get the best amount of revenue for the government. But if you go higher taxes, then what happens is people are less likely to want to work and make money. And people, because they don't want to be rich because they have to pay too much in tax. And so your revenue goes down because people don't want to be rich, and it slows the economy.
You know, who on God's green earth has ever been like, never mind, I don't really want to be rich because, you know, a bigger percentage of my money will go away, even though I have still way, way more money.
And what he's forgetting is
left over.
The highest growth years in this country were in the 50s and the 60s. And then the 70s, before the oil embargo, which is what fucked over Carter, was OPEC. It wasn't so much anything that Carter did with it. The inflation rate was artificially jacked up by the oil petroleum exporting countries, because at that point we were wholly dependent on them. because we use like a quarter of all the oil produced, and we didn't produce very much back then. Now we export oil. We have so much. So it's a different era completely, in different scenario, in different circumstance. I mean, this is literally like, I mean, let's say you have two clients and they both are married with one kid, right? And you're saying, well, this worked for this couple, so it should work for you. But then you find out, well, one of the couples, their child is deaf and needs more expensive schooling. You're not going to budget the same thing for schooling. But that's what these guys are doing on an economic scale. As they're saying, oh, the 70s, it should be similar, but it's not. And I mean, it's stupid shit. But the whole thing with the Laffer curve was, when they did that, Reagan said, okay, we're going to lower taxes, and it'll be great. It'll be great for government revenue. And what happened? It didn't speed up the economy. It dragged greater into the recession because they did that, because the government wasn't helping people, but then didn't have the resources to help people because it wasn't taking in as much taxes. So things got worse. If you ever watched Ferris Bueller's Day Off, there's the scene with Ben Stein where he's teaching him economics, and he's just droning on. He's explaining how Art Laffer fucked everybody in that movie, in that one little scene. And all the kids are falling asleep and stuff in class because it's boring. But he's explaining that, where this guy fucked up. That's how famous this guy's fuck up was. Is he was a joke in Ferris Bueller's Day Off for economists and finance people. It's a joke you guys wouldn't get unless you knew all that. But I was laughing when I was in school. I was like, that's what they were talking about in Ferris Bueller. That Art Laffer. That guy's a fucking asshole. Yeah, that's true. He's a total douche. And we're going to get into even more of the dark shit he did, but you have something to say?
And he's one that seems like he's just making stuff up. Like just throwing crap at the wall to see what'll stick, you know?
Well, he wasn't the first person to come up with it, but it's such a stupid theory because that's all it is. And the huge assumption is that if you're going to tax them too much, then they won't want to work. Which is the dumbest fucking thing. We've never seen that. Where people just like, well, you know what? I don't need to feed my kids and shit. I don't want to send them to a better school. I don't want to have a new car. Right? Because the taxes are so high. So I'm just going to give up. No, what ends up happening is you put the taxes higher. Instead of pocketing that cash and paying the higher taxes, what do? I increase my net worth by hiring more people. Buying more assets, buying more shit. Well, not my general income. Because then I can borrow shit. I can borrow money off my shit that I own and not pay taxes on it. Which is what rich people do. They don't spend their own money. They borrow against shit they own so they don't have to pay the tax. That's the incentive, and that's how that works. But he doesn't understand that one little simple financial trick that everybody's been doing for the last 60 years. And that's what fucked his whole theory. And it really damaged the U.S. economy. And you want to talk about wealth inequality and wage stagnation? That's the guy. Art Laffer. His theory is what caused the wage gap.